Hello everyone, this is Riya Singh, the Senior Currency Research Analyst for Nirmal Bank. So on the currency front, we have seen dollar index shooting up today. So this has happened after the ADP released the private employment numbers. So it has come quite down than the expected, and this is indicating that the labor market is coming under pressure right now. The main stronghold for the Fed were behind the rate hike was that the labor market remains strong and tight, and this is one of the reasons why they were doing rate hikes in order to control the wages hike due to a tight labor market. Now we are seeing quite a decline into the labor market as well. Many companies have gone forward with relieving their workers or shutting their stores, and I think this is raising the red flag of recessions into the economy, and this is one of the reasons why we saw a dollar index shooting up in the morning session above 109 levels. Talking about euro, well, we were quite positive on the euro USD, taking into consideration that Europe was reaching its target of getting its gas reserve uh, before the set target month, and they are at 80% capacity as in relation with where their reserves is concerned. But yesterday, Russia went ahead and halted the natural gas supply from its Nord 1 stream, again raising the pressure on the ongoing energy crisis there. So this is one of the reasons why we saw such a gap down into the euro USD as well as into the euro INR. Um, Going forward with the Japanese yen, where the widening gap or the widening spread between the interest rates of these two economies, that is between the US and the Japan, is putting pressure into the Japanese yen. And I think if the gap widens, we will definitely see it moving beyond 140 levels, which would, I think, trigger the intervention by the Bank of Japan. That is still wait and watch. It retracted from the highs and right now is trading around 139.18 levels. So as far as strategy goes, for the USD-INR, we remains of the same view that every dip is an opportunity to go long into the USD-INR. The opening itself is an indication. We saw a volatile open, and now it is again going back to the levels of 79, 76 and so forth. So you can go long in the USD INR above the level of 79, 76 for the target of 79.95 with stop loss at 79.55. You can also go take a position into 79.75 call either the weekly expiry or the monthly expiry. The other strategies that you can go forward with is going long into the GBPINR. Now, this is a very risky trade. So follow all the levels, whether it's taking your position or the SL, follow every level given in the strategy very carefully. So you can go long into the GBPINR above the level of 92.77 for the target of 93, 93.30. Follow the stop loss of 92.50 very closely. So I think these three strategies are something that you can look forward with in the coming sessions. That's all on the currency front. Thank you for joining in.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.